And we're lucky to be joined this morning, or I'm lucky to be joined by Jim Reynolds. He's the co-founder and CEO of Chicago investment bank Loop Capital Markets, who is visiting New York this week. And Jim, always good to see you. Not guest hosting today, but next time around you will be with me for the next 2 hours. Okay, I know you're busy. You've got a packed schedule here in New York.
Thank you.
All right, so Goldman Sachs, the numbers coming in better than expected. You've got other banking shares right now higher. Citigroup is up, I think, about 5%. Is this is this a moment for the banking industry with Goldman?
Well, Betty Lou, it's interesting. I know you and I have talked for the last several months on what's been happening with the financials and particularly with the capital markets aspect of financials. And we've been talking about that business. And I know you're not surprised. I know I'm not surprised, being in that business every day, that the trading environment has just been incredible this year. And the biggest thing that these banks have to deal with, and I haven't had a chance to fully digest what the full extent of Goldman's earnings is the legacy positions. What's really happening with the mistakes they made a year ago, 2 years ago in terms of commitments. But when
we're not talking about that very much these days, right? And those legacy assets are still there.
They're there. And I haven't seen fully what charge-offs they took. I'm going to really look later on at that. But get to the bright side. Goldman is doing what you would expect them to do when you lose. You lost a powerhouse in Bear Stearns, which was truly a powerhouse in the trading business. You lost a powerhouse in Lehman Brothers, although some of it's been picked up by Barclays. You've seen Merrill Lynch sort of leave what it was. And so Goldman's had almost a free field to itself. I mean, it's just it's like a perfect storm coming together for a group of smart business people to make money in this business. So I applaud what they've done. It's been great.
But maybe at a time like this when Washington is looking for demons, it's not that great perhaps for Goldman to stay on top or be on top. Are they going to become a target or a further target?
You know, Betty Lou, this is what's really strange to me. And, you know, I get around a lot, I travel a lot, and I talk to a lot of folks, whether CEOs or whether it's a lot of working people. And I just don't understand or get a sense why the country or a working person in Michigan, Ohio, or in Kansas would cheer against Goldman doing well just because the government invested in Goldman at a time when the financial markets were in chaos. I would expect that the results of Goldman are kind of like what we would want to see from General Motors, what we would want to see from AIG, but we won't see it. What we would really like to see from the agencies that we've invested in. I mean, this is kind of what the government investment was meant to do, in addition to stabilize, but also put these guys on footing to
Really?
do
But
well.
you can't see that, though, Jim? I mean, you can't see the worker in Michigan, and actually I'm getting a cue in my ear that we've only got 10 seconds, so I can't continue that question, but let me continue that after the break, Jim, with you. Jim Reynolds, co-founder and CEO of Loop Capital Markets. We're going to be drilling down more on those Goldman Sachs numbers, and we're also going to be talking about the muni bond markets, which, of course, Jim is a big manager of those muni bonds around the country, and so a lot to cover over the next 1.5 hours here on Bloomberg News. Keep it here. Back now with Loop Capital Markets CEO Jim Reynolds. And Jim, right before the break, I was asking you know, there's this disconnect that the governor was talking about, the New York governor talking about between, you know, Wall Street profits and why is it not filtering into the larger economy? And you can't see the public anger in that?
Well, certainly you can, just because things have been built up to paint these Wall Street workers as villains. A trader on the desk is now, he can't even talk, he can't go to his kid's school and talk about what he does for a living anymore. I think it's been overdone. I really think it has. And I think it's time we applauded businesses in the U.S. that did well, and that includes financial services.
Now, I don't know if we're done with all these bailouts because the CIT news has been perking up over the weekend. Is that company too big to fail? Should it be saved?
Well, it's not too big to fail from a systemic risk perspective, meaning there's no danger that it's going to take down the whole system if it goes. But the thing I like about CIT is that they fill a void that right now is getting bigger and bigger and bigger. And that void is that banks have really been slow to lend to small business, very slow. And almost every small business guy that I know, entrepreneur that I know, has had their lines either reduced or cut or withdrawn altogether from their banks. So these guys are having a lot of problems. CIT serves that marketplace. And if you lose a CIT, then you're losing whether it's small distributors, franchisees, small manufacturers. They really don't have another place to go get capital with the banks doing what they're doing. So I would really like to see something crafted with CIT.
But what about CIT's competitors? They wouldn't try to pick up that business if the company failed?
Well, one of the competitors for CIT normally are the banks, and the banks are not scrambling, and there's not a big push to lend to small business. Now, finally, and I've applauded this, the Treasury is looking at doing something with the SBA to strengthen their lending program,
the
small business administration, to strengthen their business lending. But I think, Betty, it's really time that the Treasury started to look at what's happening with small business, because as we come out of this, this, I think, is going to be very much of a jobless recovery. All the CEOs that I speak to, Betty, they tell me that when things get better in 2010, they're not expecting to hire a lot more people. They're going to make it more productivity driven. Well, small business is really where a lot of the new jobs are going to be created.
Right.
Maybe 50, 60, 70% of the new jobs. So should we make an effort to save CIT? Absolutely.
And you have, of course, been an advocate of putting money or funneling federal money into municipalities, because
yes,
you say that they need money as well. So if we give money to CIT, are you saying that that makes a better case then for giving money to the states, let's say?
Betty, I've been so consistent on this, I sound like a broken record. I don't understand why we can TARP or TLPG industry, corporations, and leave California with Michigan, Ohio, leave these states sort of floundering in the wind. And I've really been talking about not even cash outlays, but some sort of a quasi-guarantee under these states to lower their borrowing costs. And that amounts to billions of dollars over the course of a year. And I have to think it's going to be addressed.
Okay. Jim, great to see you again.
Wonderful seeing you, Betty.
And wonderful to have you on the program. Jim Reynolds, co-founder and CEO of Loop Capital, and I'll see you in a little bit
yes,
as well.